Joining us now on the show is Peter McGuire. He's CEO at Exim Australia. Peter, hi, good to have you. And after 2 weeks of profit-taking or correction, if you can call it so, we've seen commodities come back quite strong, whether it has been crude or metals. I'll start with metals first because aluminum, copper, zinc seem to have gained quite strongly overnight. What are you reading? Is it the supply disruption fears or fear of that the war could be extended?
Well, I think both, Manisha, and good to hear you. I mean, first off, yes, it's had a big rally. We saw what happened. I think all the full tide rose all boats. So we saw that massive lift as far as energy prices, and then that naturally rolled across to a lot of the base metals. And as you've mentioned, nothing's shown us what we saw in nickel, but the rise has been fairly strongly noted for copper, aluminium, zinc, and a host of others. The war, as far as a time period, is one that needs to be considered, and it could be extended far longer than what we think is fair and reasonable.
Peter, I was talking to Citi Edward Morse yesterday, and he said that 10 to 15% of a move on either side is what we should be prepared for in commodities, including metals. What's your sense? I mean, is that what you're looking at in the days to come?
I missed that number you mentioned as far as Ed. Manisha, what number was it?
10 to 15% of volatility in days to come on either side.
Yeah. Yes, absolutely. I think Ed's on the money there. I mean, you know, I must respect his viewpoints. And when you're seeing as what we've experienced over the last matter of days, they might be a little bit heavy, 10 to 15 either side. But certainly, you know, a 5 to sort of 10 to 12% swing is not going to be uncommon. And what we saw yesterday is outstanding. So, yes, you're going to see those big swings. Look at what we've seen in the last 2 weeks, Manisha, has been absolutely breathtaking from a trading perspective. And it could be this week might be not only another one, but it could be the most volatile, considering those global dynamics playing out. And don't take your eyes off the Houthis and what's going on in Saudi.
Absolutely. Peter, while we've made the highs, we've made all-time highs, and then we've seen a correction. Have we done the peaks for the near term at least? Will we consolidate here, or do you think there is more higher highs in store?
Hi, Manisha, I think it's so fluid, it's dynamic. No one can really put a finger on the pulse of it because it's just so, it's such a big, unwieldy market, being, you know, the energy complex and what all of those parts growing together as far as what's the EU going to do with Russia? How's the Saudis going with the Houthis? What's going on with demand picture? All of that rolled into it creates angst for any trader or trying to pinpoint price. So, yeah, I wouldn't be surprised to, again, you know, trade up to that 135, 140. The momentum's there. We've got Brent just under 120 now, and you've got WTI just sitting on 115. So it's volatile, and I think the momentum's behind it in the short run.
Peter, so what is that one thing that you will watch out from here, and what is a better trade to take? Is it buying metals, buying into crude, staying long overall commodities? What would your advice be?
Depends on your time horizon, depends on your risk profile, Manisha. If you're a trader and you're a 24-hour-a-day trader in retail, then I think you've just got to really be conscious of your stops. Don't get over geared as far as leverage, and be respective of the markets. Have a degree of respect for it, because this is big. These are dynamic times. These are unusual times, Manisha. So I think that be long in the short run, and be prepared to see large whipsawing across that complex, as Ed Morse is saying.
All right. So very volatile is what you can continue to see, but stay long is the view coming in from Peter McGuire there. Thank you so much for